This is GE Vernova Incorporated. Check it out. We're just going to get right into it. Here we go. So GE Vernova is currently sitting at $855.12. It's up 1.31% today. Over the past 5 days, it's up 2.85%. Over the past month, it's up 5.01%. Over the past 6 months, it's up 40.5%. Year to date, it's up 31.35%. Over the past year, it's up 169.17%. A 5-year chart, it's up 527.77%. Look at that. Maximum chart goes back to 2024. It's up 527.77%. Would you look at that? Got a 52-week high of $894.93. 52-week low of $252.25. Where was that sitting at? It's close to its 52-week high right now. It's got an EPS of $17.70. It pays a dividend of 0.23%, so 50 cents a quarter, with a PE ratio of 48.51. GE Vernova climbed approximately 7% over the past month, driven by a significant 2026 revenue guidance raise and a rare double upgrade from analysts. Market consensus projects continued momentum next quarter, supported by a massive $150 billion backlog and surging AI-driven demand for grid infrastructure despite lingering wind segment losses. Bullish view. Strong backlog and guidance raise. The company increased its 2026 revenue guidance to $44 billion to $45 billion, to between $44 billion and $45 billion, and raised free cash flow expectations to over $5 billion. This optimism is underpinned by a $150 billion backlog, with gas turbine capacity largely sold out through 2028 due to unprecedented power demand from AI data centers. Enhanced shareholder returns. Management recently doubled the quarterly dividend to 50 cents per share and increased its share buyback authorization to $10 billion. These moves reflect strong confidence in cash flow generation from the electrification and power segments, which are seeing organic growth rates between 16% and 20%. Strategic infrastructure positioning. Analysts increasingly view the company as a critical AI infrastructure play rather than a legacy utility supplier. High margin slot reservations and a 100% ammonia combustion milestone for gas turbines demonstrate technical leadership in a market facing acute power and grid bottlenecks. The bearish view. Persistent wind segment losses. Despite overall growth, the wind segment remains a significant drag on earnings, with projected EBITDA losses of approximately $400 million in 2026. Ongoing operational vulnerabilities, including installation challenges at major projects like Vineyard Wind, continue to pressure the company's consolidated margins. Stretched valuation multiples. The stock's rapid 150% surge over the past year has pushed its forward PE ratio above 50x, which some analysts consider rich compared to industrial peers. Some DCF models suggest the stock may be overvalued by approximately 21% on intrinsic cash flow projections. Executive stock sales. Multiple high-ranking executives, including the CEO of the power segment and the chief commercial officer, engaged in share sales during March 2026. While often routine, these transactions can sometimes signal a near-term ceiling in internal confidence following the stock's massive rally. Let's go back and look at the earnings. So we've got on January 28th, 2026, they beat earnings by 310%. 310.91% beat. They were projected to get $3.14, and they got $12.91. Damn. So they also beat on revenue by 7.05%. They were predicted to get 10.23 billion. They got 10.96 billion. So here's some insights from the latest news reports. GE Vernova exceeds Q4 estimates. GE Vernova reported a massive beat with adjusted EPS of 13.36 against the $3.14 estimate and revenue of just talking about the beat here. Revenue of $10.96 billion, exceeding the $10.23 billion forecast. Okay. Guidance raised following strategic acquisition. The company raised its 2026 revenue guidance to $44 to $45 billion and free cash flow outlook to $5 to $5.5 billion, incorporating the impact of the Prolec GE acquisition. Significant one-time tax benefit. The substantial EPS beat was largely driven by a $2.9 billion one-time tax benefit related to a U.S. valuation allowance release, which significantly boosted net income. Record backlog and order growth. Total backlog reached a record $150 billion by the end of 2025, driven by a 65% organic surge in Q4 orders, fueled by data center and grid infrastructure demand. Okay. Segment performance divergence continues. While the power and electrification units saw robust growth and margin expansion, the wind segment remained a drag with projected EBITDA losses of approximately $400 million for 2026. So we'll look at a few of the last times that they missed. They missed EPS in Q3 of 2025 by 18.56%. That's the one where they just crushed it by 310.91%. And then it goes back to Q4 2024. They missed EPS by 43.95%. And they missed revenue by 1.34%. And then right before that, in Q3 2024, they missed EPS by 116.56%. And then they missed in Q2. And then they missed in Q1 of 2024 by 82.8%. Very interesting. And that's GE Vernova. Let's go down and read an article about them. This is 55 minutes ago. So this is Simply Wall Street, reviewed by Bailey Pemberton. Has GE Vernova run too far after its 156.4% one-year surge? Here's a little overview. This article explains in plain terms whether GE Vernova's share price reflects its real worth or if expectations have run ahead of fundamentals. GE Vernova's stock recently closed at $858.47 with returns of 1.3% over 7 days, 7.0% over 30 days, 26.3% year-to-date, and 156.4% over the last year. Recent coverage has focused on GE Vernova as a pure play on energy transition and grid technology following its separation from General Electric. This has helped frame the stock as a focused capital goods business rather than a diversified conglomerate unit. Commentators have also highlighted how this cleaner story may be influencing how investors think about its risk profile and long-term potential. Despite the strong share price performance, GE Vernova's valuation score currently sits at 1 out of 6. The next sections will break down what different valuation methods say about the stock and then finish with a more holistic way to think about what fair value really means for you. Well, look at that. Let's read it. Let's see if it'll let us read it. Very cool. Approach 1. Approach 1. GE Vernova discounted cash flow analysis. A discounted cash flow model takes projected future cash flows, then discounts them back to today to estimate what the business could be worth right now in present value terms. For GE Vernova, the model uses current last 12-month free cash flow of about $3.95 billion and a set of cash flow projections that extend out to 2035. Analyst estimates run through 2030, such as $4.69 billion in 2026 and $10.8 billion in 2030 and later years, are extrapolated using simply Wall Street assumptions. Each of these projected cash flows is discounted back to today using the two-stage free cash flow to equity approach. Jesus Christ. On this basis, the model arrives at an estimated intrinsic value of about $672.07 a share, compared with the recent share price of $858.47. That gap implies the shares trade at around a 27.7% premium to the DCF estimate. In other words, the model indicates that GE Vernova is overvalued relative to the cash flow assumptions currently included in the forecast. Result: overvalued is what they say. Our discounted cash flow analysis suggests GE Vernova may be overvalued by 27.7%. Okay. Got a little graphic there for you. Okay. Approach 2. GE Vernova price versus earnings. For profitable companies, the PE ratio is a useful way to think about what you are paying for each dollar of current earnings. It quickly links the share price to the business's ability to generate profit today. What counts as a normal or fair PE depends a lot on how the market views a company's growth potential and risk. Higher expected growth or lower perceived risk can justify a higher multiple, while lower growth expectations or higher risk usually point to a lower one. GE Vernova currently trades on a PE of 47.38x. That is above the electrical industry average of 31.54x, and also above the peer group average of 45.7x. Simply Wall Street's fair ratio for GE Vernova is 73.44x, which is proprietary estimate of what the PE might be given factors such as earnings, growth profile, profit margins, industry market cap, and company-specific risks. This fair ratio can be more informative than a simple peer or industry comparison because it adjusts for those company-specific characteristics rather than assuming all firms deserve similar multiples. With the current PE of 47.38x sitting below the fair ratio of 73.44x, the shares screen as undervalued on this metric. Upgrade your decision making. Choose your GE Vernova narrative. Earlier, it was mentioned that there is an even better way to understand valuation. Narratives let you turn your view of GE Vernova into a simple story that links assumptions about future revenue, earnings, and margins to a forecast, then to a fair value that you can compare with the current price on Simply Wall Street's community page. Different investors may, for example, see GE Vernova as worth around $538.80 at the cautious end, or around $1,019 at the optimistic end, and have those fair values updated automatically when new news or earnings arrive. This can help each investor decide whether the stock looks expensive or cheap to them at any point in time. For GE Vernova, however, we will make it really easy for you with previews of two leading GE Vernova narratives. GE Vernova bull case, fair value $912. US versus price versus fair value around 5.9% above this narrative. Fair value based on the recent $858.47 share price. Revenue growth assumption 9.9%. Frames GE Vernova as a toll booth on the AI power buildout with a large backlog and gas turbine slot reservations underpinning visibility on future projects. Highlights electrification and power segments as key earnings drivers, with Prolec GE integration and transformer demand linked to data center build, while wind remains a drag but is absorbed by other divisions. Uses a forward PE-based approach, applying 32x multiple to projected 2027 EPS to arrive at a $912 fair value, and treats the company as a backlog-driven power equipment supplier. GE Vernova bear case. Fair value $819.92. Price versus fair value around 4.7% above this narrative. Fair value based on the recent $858.47 share price. Revenue growth assumption 14.83%. Sees long-term support from electrification, decarbonization, and grid software demand, with a growing installed base feeding higher margin service and software revenue. Flags risks from wind segment losses, tariffs, large project exposure, and restructuring execution, which could all affect margins and earnings stability. Anchors fair value around an analyst consensus target of about $652.19 and an updated model fair value of $819.92 based on assumed revenue growth, margin expansion, and a future PE in the low 30s. This is not financial advice. This is not even my opinion. This is their opinion. So, what do we think, guys? What do we think about GE Vernova? Sounds kind of interesting. Pretty cool. Let me know what you think in the comments, guys. Very cool.